Do you think your market, the debt market, is doing very well despite the sluggish nature of the economy in a year and a half, two, thereabout?
It's doing fairly well. I mean, we've seen a couple of good bonds come to the market. And, in my own shop, we've seen inquiries from both issuers and interest from investors. Whether or not, there's the capacity to take as much as the issuers, are wanting to borrow is the question.
But do you think the government is still crowding out the...
It is. I mean, I think, you really and truly cannot, be competing with the federal government that has access to, a pool of funds for debt service, whereas, the corporates and the state governments who do borrow have to be a bit more selective and a bit more in pricing, and, have to be a bit more tight in what's been offered. But, there is interest.
The government needs all the monies it can get. It needs all the support it can get. So what support will those of you in the investment banking, the debt market, the deep end of the financial market will be doing to support, for instance, the medium-term economic growth plan, the EIGP?
Okay, my perspective is slightly different from what you just mentioned. So does government need all the money? Government needs all the money to do some of its social projects, but does government need all that money? I think infrastructure development and the implementation of ARPG, there is a place for private sector. There is a place for private sector because it's a lot more disciplined, and I think there's a lot more capacity in the private sector to drive those ARPG. So ARPG will roll into infrastructure. I was reading this morning about agriculture and how, post-harvest there's about maybe, I think the figure was about $3 to $6 million waste. So, is it government that's going to go in there and fix it? I don't think so. I mean, private sector can come and, build storage, build transportation, and other things. Government is providing feedstock in terms of fertilizers and other things. Private sector, can join with government. So I don't think the burden or it's government that we should be looking at all the time to borrow. Private sector can drive that through the issuance of debt instruments, and you'd be amazed at how that would lift many aspects of the real sector, create jobs and all that, and build confidence amongst both issuers and other participants in the debt capital markets. I don't think it's all government.
Why do you think subnationals are staying away from the market, from the debt market this year? I think we've seen just about one.
I think you're right, but I'm not sure that it's a question of them staying away. I'm sure if they met the respective criteria, then they would be out there accessing the debt capital market. There are regulations, and we know a few years ago government had to bail out state governments, and we still have talk every day about how some state governments are not meeting all their obligations. So there are all those challenges. If you're not going to be able to access debt and service that, then there's no point coming, because it just creates a further burden on your treasury. I speak again to Lagos State, because we just worked on another transaction where Lagos State raised 85.14 billion naira. So Lagos State is is continuously accessing the debt capital market, but that's because Lagos State has that capacity. So if other state governments are able to generate a lot more in terms of IGR and not be so dependent on FACA allocations, for example, then they begin to create that enabling environment to access the debt capital market.
On a broader basis, the DCM development project of 2020-2025, can you contextualize everything as we've achieved and your outlook within this broader framework?
We've achieved a lot. We've achieved a lot. I think we've achieved a lot in terms of understanding what DCM is all about, bringing in more participants, having the regulators on board, and constantly reviewing regulations and making them a lot more attractive to issuers. I think even from the center, there are things that you would need from the DMO and from the Federal Ministry of Finance. And so, they're all working together to be able to develop that debt plan. And, all the capital markets, so Kemi and the tax regulators, everybody, is working together to try and create a broader base for this. You have the infrastructure credit guarantee company. So, I think, as all these various aspects are developed, then you would see people who are coming, more and more to access debt.
Do you think the debt market is crowding out the equities market?
No, I think they're two.
You folks are cousins.
They're two different things. So sometimes, it depends on what you want in your portfolio. It depends on what your needs are at a particular time. Do you want very long term? Do you want a stake? Do you just want to get timed cash flows so you get your interest and all that? So it depends on what exactly it is that your portfolio.
But yields is very sweet, Hadi, this year.
Sorry?
Debt yield. Yields on papers are much sweeter.
Yes, they are. Yes, they are. And they're a lot more stable. So, it depends on what your risk appetite is. It depends on what you want in your portfolio. So, all those things will come to play.
But again, the yield curve, how sustainable do you think this yield curve really is? Because the government is coughing out so much to bond holders and treasury holders as well.
Sustainability, I jokingly say one thing, that as long as we work, the federal government has more than enough to service its debt. So, that yield curve, is rather aggressive. And what it does is for corporates who want to borrow, and even state governments, because people are looking at, those very, very attractive yields from federal government and wanting to price in to that extent. Is that sustainable in the private elements of debt capital markets? It can become problematic, because you can only go so much. You're only generating so much in terms of revenue. You don't want to be overstretched.
But again, if you look at the current papers, it looks like the government is beginning to wind down a little bit.
Government seems to be softening, because if you look on some of the recent auctions, yes, the rates have come down, even almost exponentially. So that's a good trend, and one will begin to watch that and see how that plays out in terms of then giving a bit more encouragement to issuers, because pricing is always an issue.
Pricing is an issue, always, all the time. But whatever it is, you folks are making money.
Thank you very much, Person.
Kemi Awodein, the Managing Director, Investment Banking at Chapel Hill, Denham Advisory. Thank you very much. You have a great weekend, madam, and see you next week.